Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate, with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. This week, my guest is Ron Blum. Ron is a turnkey operator in Kansas City, Missouri, or Raytown, Missouri, or Missouri, I guess, in general, because I guess you're doing a bunch of other towns as well now, right?
Sure. Oh, yeah. We've been expanding pretty rapidly now.
Give me an introduction of yourself.
You know what, Glenn? I'll tell you what. I'm going to go ahead and just kind of give everybody the Reader's Digest version.
Perfect.
Long and short, born and raised Southern California, was involved in residential developments during the 80s boom years. Went from there to Canada. I was 4 years in Vancouver, 4 years in Montreal and Ontario, in Toronto. So I'm real familiar with the Canadian mindset. I'm very, very familiar with Canada in general. I lived up there for 8 years, yeah. And I was actually married to a Canadian. She died in 2001 from breast cancer. Came to Kansas City, and when I got here in 2000, I spent probably the first 8 years here working with institutional investment firms. My background is in loan servicing and purchasing and acquiring and servicing large portfolios of seriously delinquent mortgages. So kind of, going back to my roots, we made enough money, and I just got to a point where I said, well, it wasn't what I said, it was what Debbie said. I came home one night and I started to, grumble and groan about, the office and, all these things. Debbie told me, she said, the way I see it, you have three options. Either one, shut up, keep doing what you're doing and, bring home the money. Yeah. Two, retire, or three, do something that you enjoy. So I just went back to actually, hands-on, with actual assets. And so we just kind of came to a conclusion that if we're going to sell to individual investors, then we're going to put them in the same neighborhoods where Debbie and I invest our money and where we have our own rental portfolios. And at that point in time, the next question was, are you able to provide financing? And, there's just nobody out there that, really, wants to provide financing. Well, I have a network, as you're well aware, where what we do is we underwrite the loans, and then the loans end up being taken out from us by probably the five biggest life insurance companies in the country. And they buy the loans from us, which allows us to become whole. We do deploy our own capital, and we purchase our own inventory, and we rehab our own inventory. So we're not a middleman. There's a lot of turnkey providers, quote unquote, out there. Yeah. But they don't own the properties. They're working through a broker in Kansas City or Indianapolis or Jacksonville. As somebody that has my own money into the purchase and the rehab of these properties, we have a vested interest in them. And because we're managing the properties through our house property management, which is my wife's end of the business, we have a long-term commitment. So relationship building is a big thing with us. Yep. If you go to MarketWatch said in 2016 to 17 that Kansas City had the highest depreciation rate of any market in the entire United States at 13.3% annually. When you're depreciating an asset that's actually gaining 13.3% annual in appreciation, well, yeah. That's pretty significant. Yeah. Now, let's look over the numbers for your property on Marsh, and I think that you're going to find out on this webinar and on this podcast some information that you're probably not familiar with. Now, I don't really consider Zillow or Realtor or Trulia or Redfin the definitive voice on property valuation. Some bring it high, some bring it low. Okay. Zillow is traditionally high, Realtor is traditionally low. So for property valuations, as you're well aware, when we're selling a property to a prospective investor, or when we're providing information to investors, we not only send the the pro forma. But what we also send is we also send comps. And as you're well aware, Canada is no different from the U.S. You can pull anything off the internet, and use that as some kind of justification or valuation of a property. However, realtor comps is really the only thing that matters.
Yeah, they're the best ones usually.
Or the other way that I find that works is pull up the property valuations from Zillow, Realtor, Trulia, and Redfin, and use all of those combined, add Trulia, Realtor, Zillow, and Redfin valuations, and then divide it by 4.
Yeah.
Now, your house on Marsh, the 3-bedroom, 1-bath, that's in Raytown. Zillow has your property that you bought for $89,000 right now at $120,000 market valuation.
Seriously?
Realtor uses the pre-rehab valuation, and they had it at 80.
Yeah.
Trulia has it 112. Redfin has it 109. If you average all those out, the house that you bought for $89,000 has $105,000 average valuation between those four platforms. Now, let's take a little bit closer look at 83rd. I'm not even going to tell your listeners what you bought that for. Yeah.
I know what 83rd is. I've been checking 83rd out. I've been working on doing a cash out refi on 83rd.
Well, Zillow has it at 132,000.
Yep.
Okay, and you're in just a shade under 100. Zillow has it 132. Realtor has it at 84.9 pre-rehab. Trulia 130 and Redfin at 132. Net 133. So the average of those 4 brings it in at 120, and Realtor.com has it at 84.9 pre-rehab. So if I just took Realtor out of the equation altogether, you're looking at $131,000 valuation on that property alone. In Missouri, and we have everybody that buys properties, that tenants our properties. We have them sign one little magic thing, and it's not even necessary for them for us to have this document for them to sign. What it is called a default acknowledgement. And the default acknowledgement basically says, listen, if you sign a 12-month lease and you leave after 6 months, we're going to sue you. We will get the judgment. We always do. If you break the lease, we're going to come after you and we're going to garnish your paycheck.
Yep.
So I have a client that's in British Columbia that we just did this with. We had to evict the tenant after 7 months. We got a default judgment for the balance of the 5 months that they still owed on that lease. We're garnishing that paycheck, and we've already rented it out to somebody else. So in addition to getting his monthly rent on that property with the new tenant that we placed there, he's also getting a check every month for the garnishment for the default of 5 months. So he's actually getting 2 payments every month on one property. Wow. And that's how aggressive we are. We do not let these people slide. We are firm, but we are fair.
Yeah, it's a contract, right? And you're one of the top landlord-friendly states, the top 5.
Boy!
So you have that ability. So whether it's like a contract state, so it's a contract that they're breaking. Whereas if you go into a more tenant-friendly state, they don't look at it the same way.
And allow me to explain what a HPI is. You can actually do this if you go to Google and you punch up Housing Price Index Toronto. You'll be able to pull it up anywhere in Canada. However, in the U.S., when you're converting Canadian dollars into U.S. dollars and buying real estate, looking for returns, then you really want to be able to take a closer look at where you're buying. Markets do matter. We're not just in Kansas City, but I'm a big proponent of Kansas City, having lived here and owning a house in California that was a 3-bedroom, 2-bath house that was worth $800,000, as opposed to having a house in the Kansas City metro that was 4 bedrooms, 2.5 baths on a golf course for $140,000.
Yeah, totally.
I mean, it was a real eye opener. Probably get the same reaction, from my California clients that I do from your Canadian clients. But housing price index, what that is, these are graphs that Glenn is going to show you,
Yep.
and it's going to show the rise and the fall of housing prices over the years. And the housing pricing indicator is done by Fred, which is in effect a data branch of Freddie Mac. And Freddie Mac, Fannie Mae, and HUD, you're familiar with all of them, Glenn,
Yeah.
are the industry leaders and the government entities that actually track housing values. And if you're ready, I'm ready to go and start explaining some of this stuff.
Go for it. Let's dig in.
Okay, so do you have your graphics there?
I'll add it all in after. It'll be after edited.
Okay. Now the first one that I had, I believe, and I'm going to go ahead and kind of refer back to email. I think the first one that I put up there was Atlanta.
Okay.
And in Atlanta, what you're going to see is that property values kind of significantly rose, throughout the 90s and into the 2000s. What's really quite interesting about that is that in 2009, which was when the housing market crashed, I mean, absolutely crashed, you see a pretty significant dip. Now, there's a couple other markets that I brought in there. Ohio seems to be a state where a lot of people are investing, and I actually punched up the housing price indicators for Ohio itself. And what you're going to see in 2009 is that property values went down significantly. Now, if we take a closer look at some of the really volatile markets like Las Vegas, Nevada, and Phoenix, Arizona, I did not send you Sacramento, California, but I have that as well. What you're going to see is that housing prices in 2004 and 2003, they went from an average median housing price value of $120,000 to over $250,000. And in 2009, those houses went right back to $120,000. I mean, straight tanked. So what you had is you had a bunch of investors that at the height of the real estate market in Las Vegas and in Phoenix and in Atlanta and some of the other big markets in this country bought houses for $180,000 and $250,000 and $350,000.
Yeah.
And when the housing market crashed in 2009, they had a $240,000 market or a $240,000 mortgage or a $300,000 mortgage on a house that they bought in 2009 that in 2010 was worth $150,000.
But the way I always look at this sort of stuff too is if you are willing to ride the wave, like all those property values are back up, right?
Very often. But a lot of the investors, it's kind of like investing in the stock market and buying in at $100 a share, and then opening the paper tomorrow and finding out that your $100 share is now worth $10. Now, if you hold on to it, okay,
you might break even. Then you'll get your money back someday.
Then you know what? Hey, that company might go back up to $100 a share. Yeah. But you know what? You're going to have to ride that wave, like you had said. Now, what happened with a lot of people that had a $300,000 mortgage on a $150,000 house. They had to sit around for 9 years to see those valuations come back and see their property appreciate. Now, when you take a peek at Kansas City, the housing price index went up and up and up and up. And in 2009, it went down 6%, not 100%, 6%. So, when you're in a house for $100,000 and the housing market crashes and now it's worth, 90 or 94, and then next thing you know, there's 13% annual appreciation rate over a number of years, then, you really didn't take a big hit when the housing market dropped, and your property has actually been gaining value, since, 2010. Sure. And as you're well aware, Glenn, I mean, you and I both have the are strategically poised to be able to help people to set up a U.S. bank account, to help them set up a U.S. LLP, which some people like. Some people like putting them in their names. Some people like putting them in an LLC. That's where having you up there in Toronto is really of great benefit to us. You've been down this road. You've done this. You've done this in multiple cities, multiple markets. You have a wide range of property types in your portfolio. So, having a Canadian investing in the USA, is, of great benefit to people in Canada. They need somebody to be able to walk them down this path. It's a scary thing, Oh,
it's really scary off the start. I'm just one of those guys that I ready. How does it go? Ready, fire, aim.
Yeah, ready, aim, fire.
I skipped the aim part. I figured that out afterwards. I went and bought properties in the States off the start before I had my LLC set up, before I had my LP set up, before I had my ITIN. I had a property under contract before I had anything ready to go, and it was the most stressful thing ever. But a lot of people don't have that. They usually set stuff up, and I recommend everyone to get your stuff set up in order. But
yeah,
I'm the reason it worked off the start, because you talk about the fear off the start, is I just jumped and I knew I'd figure it out. And a lot of people don't have that fear, or have that fear of, they need to see the whole road to have all green lights before they start proceeding.
Sure.
But now it's a lot easier because there is more Canadians that are doing this, and it's nice to have someone you can pick up the phone and talk to before doing it who has done it, so you're not jumping in completely blind and hoping it works out like I did off the start. Yep. The one place that I really got to commend you, Glenn, is that, you are one of those rare people that saw opportunity, saw where the value was at, made a decision and acted upon it. There's a lot of people that, will listen to every podcast, webinar, and go to every seminar and never act. And the only way that anybody does anything or achieves anything in life is not continually trying to educate themselves, but finally saying, you know what, this is a vehicle that I'm comfortable with. Glenn Sutherland's guy I trust, Ron Blum's guy I trust. We've been here for 17 years. And believe me, Glenn, it was not an easy thing for me growing up, born and raised in Orange County, California, and running up and down the beaches of Newport Beach, surfing throughout, when I probably should have been going to high school. And, just dropping everything and moving to Vancouver, British Columbia, and, getting involved in residential real estate development when Hong Kong, China, by the way, went back to British rule. There was this incredible exodus, and we were selling houses, from the trailer while the land was still, going through excavation. People were coming in and buying houses based on the blueprints, Yeah. And, that was a big leap for me to do. But in real estate, you have to leap, you have to jump, you have to have confidence in yourself. You got to be able to move quickly. Otherwise, if it sits there, if it's something that's going to sit there, then it's probably something you don't want anyway.
One thing I will say about our primary market here in Kansas City,
yep.
And I'm at 827 here, so I'm going to try to sum it all up in 3 minutes. I love Kansas City. I love Indianapolis. I sent you the housing price indexes on both markets. Yep. Indianapolis is very, very similar to Kansas City. You'll see the graph go up and up and up. It takes a little bit of a downturn, maybe $5,000, $6,000, $7,000, $8,000, and then goes right back up. Yep. Kansas City is directly in the middle of the country. When I was, given the opportunity to come to Kansas City and run Continental Capital Corporation's servicing division and their loan acquisitions division, I thought I was going to come here and it'd be, cousins married to cousins, and, it takes 4 people to make a full set of teeth, rodeo belt buckles. I just really didn't know. But when I got here, the cultural enrichment here, we're directly in the middle of the country. There is a ton of money in Kansas City. We're directly in the middle of the country. And as such, every major U.S. corporation has a very, very big presence in Kansas City. We were the very first city in the U.S., and this was 3 years ago, during a different administration and a completely different economic time, that it was a full employment market. It was below 3% 3, 4, 5 years ago. Yeah. And the reason why is that every major company does their distribution out of Kansas City. Google has a wonderful, and I got a little spoiled by this, has probably the best internet slash TV slash phone system in the country. When I was back in Kansas City, I could record 10 programs at the same time with unlimited download capabilities. Their internet service is 100 times faster than traditional cable-based internet.
Yeah,
however,
it was something to do with you guys were a pilot project or something, right? They came through and ran through the whole city. I remember. Right. Yeah.
Now, I used to go out to California, and a lot of my investors are out in California in Silicon Valley. And I used to drive right by the Google headquarters. Mm-hmm. Now, Google didn't start Google Fiber in San Jose, California. What they did is they built it in Kansas City, in the direct center of the country. And then they built out nodes from Kansas City to Utah and to Georgia and to, so what they did is they built from the center of the country, north, south, east, west. Now, if you're a nationwide company like Walmart, Target, Best Buy, Dick's Sporting Goods, any of the big retail brands, what you do is it's easier for you to have a presence in Kansas City and distribute north, south, east, and west than it is to be in San Jose and try to build towards the East Coast. So from a cost-effective standpoint for large corporation, Kansas City in the middle of the country is a lock. I mean, it's a no-brainer. So if you take that same philosophy that Google used by starting in Kansas City and moving points north, south, east, and west, then you apply that towards Amazon. Now, Amazon has their main distribution center in Kansas City. If you buy something from Amazon, it's being shipped from Kansas City. Now, they may have been building another headquarters in New York, which obviously fell through and blew up in their face. And they may be based in California, but all of their distribution is based out of Kansas City. In fact, my sister-in-law works for Amazon in Olathe, Kansas, which is part of the Kansas City metro area. Okay. So if you take that philosophy like Google or Amazon, and you apply that to all the large corporations in America, what you end up with is you end up with tremendous job growth, and you end up with a housing shortage, which is what we experience now. Debbie started to advertise properties. We had 4 more that became available within the last week. We put them on to hot pads, which will populate on Trulia and Zillow and Rent.com and a whole bunch. Yeah. We're getting 15 to 20 rent requests. And when we start to see movement like that, that's just a very strong indicator of our market here. I will never go back to California except for business. I would never live there again. I can't stand the traffic. I can't stand the just anything about it. I'm a Kansas City guy. I'm a Kansas City guy that was born and raised in California, that lived in Vancouver, that split 4 years between Montreal and Toronto, and there's just no place else I've seen the kind of opportunity and the availability that I've found here, Glenn. I'm just very happy being here. We're happy to have you as a client of ours. We're happy to have the referrals that you've sent to us as clients of ours, and we will do our best to continue to take as good a care of you and as good a care of your followers, friends, clients, and people that you're referring to us as best that we can.
Awesome. If somebody wanted to get a hold of you, what's the best way to do so?
The best way for them to get a hold of me is to get a hold of you.
That works. So Glenn at glennsutherland.com, and then we'll have a discussion, and we'll see if it's make sure it's a fit, and we'll dismiss your fears, I guess.
Well, we'll do our best to try to make this a painless process. I mean, at the end of the day, Glenn, passive income should be exactly that, passive income. I want to look in my bank account and see a deposit.
Yep.
You know, and if you have to micromanage the whole thing, then it's not a passive investment anymore. What it is a pain in the butt. So between you and I think that we'll be able to, you know, temper that as best as we can and make this, you know, a pleasant experience. Investing should be a pleasant experience.
Thanks for coming on the show, Ron.
Of
I
course,
really appreciate your time.
It always a pleasure to talk. You know, I'm always just a phone call away. Debbie, same thing. And
awesome. Thanks again for your time, Ron. I'm going to let you go.
Glenn. All right. Have a good night.
Thanks.
Give my best to the family. Bye-bye.
Will do.